What most buyers don't understand about mortgage rates. Mortgage rates are one of the biggest black boxes in the home buying process. Most buyers think lenders just offer a rate, like it's fixed, static, and based on mainly your credit score. That's not how it works. Once you understand what actually goes into a rate quote, you'll make far better decisions with less stress. Hey everyone, I'm Joe Bastien, VP of Sales with West Michigan Mortgage. I lead a team of loan officers who help buyers navigate financing decisions every day. Today, we're pulling back the curtain on something most buyers never see: how mortgage rates are really determined and what a lender is actually doing when they quote you a rate. Because a mortgage rate isn't just a number, it's a strategy. The biggest misconception buyers have is believing that a lender has one rate, and that rate is mostly tied to your credit score. In reality, lenders don't have a single static rate. Rates aren't one size fits all. And credit score is just one factor among many. Two buyers with similar credit scores can receive very different rate options with very different costs. That's because rates aren't assigned, they're chosen. What a rate sheet actually is and what a rate lock really means. Behind the scenes, lenders work off something called a rate sheet. The easiest way to think about a rate sheet is this: it's a pricing menu for a specific day and time. Instead of one rate, a rate sheet shows multiple interest rates and what each rate costs or credits based on the borrower's profile and current market conditions. Here's the part almost no buyers understand. When you lock a rate, you're not locking a single number in isolation. You're actually locking that day's rate sheet. That means you're securing the market conditions at that moment, the available rate options, and the pricing attached to each option. And within that locked rate sheet, there is often flexibility. In many cases, buyers can move up or down within the rate sheet, adjust between paying points or receiving credits, fine-tune the rate choice as goals, cash needs, or numbers change. So a rate lock isn't a one-shot, all-or-nothing decision. It's more like locking the menu and then choosing the best option that fits. A rate lock secures the market, not just the number. Points, credits, and why rates can cost money. This is where buyers are often surprised. A lower interest rate usually costs money, called discount points. A slightly higher rate can actually generate a lender credit that reduces closing costs. So, buyers typically have options. You can either pay more upfront for a lower monthly payment or accept a higher rate with less cash due at closing. Neither option is inherently better. The right choice depends how long you plan to own the home, your available cash, and your comfort with your monthly mortgage payment, and your long-term financial goals. The lowest rate isn't always the cheapest loan. Why online rate quotes miss the mark. This is why online rate quotes are often misleading. They usually don't account for loan type, property type, occupancy, down payment, the lock timing, market movements, or your personal goals. They just show a number, but not the strategy behind it. That is why two lenders can quote the same rate and one ends up costing thousands more. A good loan officer isn't just quoting a rate. They're reviewing the rate sheet with your entire situation in mind: your timeline, your goals, your cash position, and your tolerance for upfront costs versus monthly payment. The role is to help you decide which rate option makes sense for you, not which number sounds best on paper. A great loan officer builds a rate strategy, not just a quote. This is why rate shopping before you're under contract often creates more confusion than clarity. Until we know the property, the purchase price, the loan structure, and the timeline, any rate quote is incomplete. The smarter approach is to choose a lender that you trust, secure a strong, reliable pre-approval, then evaluate rate options once the deal is real. That's when comparisons actually matter. Shop the lender first, the rate second. How buyers should think about rate set. Instead of asking, "What's your rate?" better questions are, "What rate options do I have? What do those options cost or credit? How does each option affect my payment? Which one aligns with my goals?" That conversation leads to confidence, not confusion. So here's the big takeaway. Mortgage rates aren't fixed offers. They're flexible tools. When you understand how rate sheets work and work with someone who explains your options, you avoid surprises and make smarter decisions. At West Michigan Mortgage, our team focuses on transparency, education, and helping buyers choose the option that fits their life. not just a headline number. If mortgage rates have ever felt confusing or unclear, we're always happy to explain. Thank you for watching, and we'll see you next week on West Michigan Mortgage Weekly.